Hey everyone, Brian Bogner, Greg Towner here, and we hope you're having a wonderful summer. It's time for our August 5-minute market update video. So let's go ahead and get started and get right into the charts. Take it away, Greg.
Yeah, great. Thank you, Brian. Well, this month we actually wanted to take a longer term view. This is a 10-year chart of the S&P 500. This year's actually been an amazing year. It's really had quite low volatility so far this year, amazingly. I mean, there's been hardly any pullbacks at all. We've also seen a lot of all-time highs. We've actually had 49 all-time highs already this year. That's the best start to a year. Only one other year in the last 100 years has been a better start to the year. But now just here in the last few days, we've actually seen some volatility, and we think there's at least a couple of reasons for that. First of all, we're in a period seasonally, kind of this August, September period, where sometimes is a little weaker in the market, or can be, obviously not always. So some seasonal weakness. But we're also seeing some comments out of the Federal Reserve, some concerns that they're going to start reducing some of their quantitative easing, maybe late this year, early next year, keeping rates where they are. So you're starting to hear people talk about Fed tapering. So for those of you that have been investing over the last 10 years plus, you may recall back in 2013, the so-called Fed taper. They announced that they're going to start raising their rates and reducing their stimulus, and the market kind of freaked out briefly. But when I say briefly, I mean briefly. Like, you can not even find it hardly on this longer term chart. Stocks pulled back 5 or 6% briefly. Then of course they continued to rally. Interest rates did increase, but stocks barely even noticed. So, we don't know if that's how it's going to play out this time, but we think you should stay open-minded to the fact that, hey, the market might have an initial reaction to things, but then it will get back to business as usual at some point. And so, why has the market done so well this year? Obviously, we all know, some of the things that are still going on in the world, but there are some very important reasons why the market keeps chugging along. Earnings at a record high by far. This is the S&P 500, so this is, large and mid-sized companies just breaking new records on earnings. So that's been a big push for the stocks. We talked about the Fed. Yeah, they may eventually, make some changes to their stimulus, but the bottom line is right now, their balance sheet continues to make new highs every week. They're adding liquidity to the market, and that's a positive. And so what does that do? That keeps interest rates low. I mean, interest rates, the long-term downtrend still arguably is intact. We're not far off the all-time lows. I think all of you know what you get for interest on your bank account or checking account or that sort of thing, basically nothing. So where else can people go other than stocks? Sure, there's some choices out there, but for the most part, stocks have a better appeal compared to low interest rates right now.
And one of the things we've also been seeing is there's this rotation right now from growth stocks to value stocks. And this chart here, the blue line, this goes back 10 years. The blue line is growth stocks, and the orange line are value stocks. And if you notice, I mean, really coming into 2017, they were pretty much, somewhat in line with each other here during that. And then we really started to see the lift here in the separation from growth to value. And that's really what this bottom chart, this bottom one here shows us, is when the line's rising, growth's outperforming value, and when it's coming down, value is outperforming growth. As you can see here, this separation has gotten pretty significant since the lows from last year, off those COVID lows. Growth had that initial outperformance, but then value stocks are starting to outperform now. And most people are in those heavy growth. They love talk about those heavy growth tech stocks and things like that. And we're actually seeing some of these other areas in value, financials and industrials and things like that, a little more cyclicals type stuff, start to now outperform and do well. And that's positive. That's actually positive. You want to see your cyclicals doing well in the economy. And then finally, this here is just inflation, just showing you that, we've talked a lot about inflation, and there's we do believe some of this is transitory. I mean, if you go to the Home Depot, you'll see that lumber prices are still high, but when we actually look at the futures and the spot price, they have completely collapsed, and it might take a little bit to get those in the system. So prices are coming down in a lot of areas, but inflation is still going to be higher. I mean, we're coming off a period of record low inflation. So just because we have higher inflation doesn't mean we're, things aren't getting more expensive. But just keep in perspective here, that we're coming off a record low. So in a nutshell, S&P 500 at all-time highs. Will the Fed tapering have an impact? It didn't last time they did it. We don't know this time around, but if history's a guide, that's what we've got. S&P earnings are at all-time highs. That's why the market keeps moving higher. Fed balance sheet is at all-time highs, which keeps rates low, which continues to lift asset prices. We're seeing this rotation, like we talk about, from growth to value. So we're repositioning portfolios here to reflect that and make sure that we are exposed to that. And then inflation, look, it's elevated, and it's elevated coming off a historic low period. So if you have any questions or any thoughts or anything, just you know how to reach us. Here's our email address, our phone number. We'd be happy to talk to you. Thank you so much for watching. Have a great day.